What is volume in stocks? Volume is described as the number of shares traded in a particular security or an entire market during a given time period. For every buyer, there is a seller, and each transaction between them contributes to the count of total volume. When buyers and sellers agree to make a transaction at a certain price, it is then considered one transaction. For example, if 5 transactions occur in a day, the volume for the day will be 5. In other words, volume in the stock market is the number of shares traded of a particular stock in a given time frame. If a stock has a volume of 5,000, it means a total of 5,000 shares of the company were traded during that time. Volume is an indicator. In technical analysis, it is used to measure the relative worth of the market move. If the market is making a strong price movement, then we can say that all the strength of that movement depends on the volume for that period. The higher the volume during the price movement shows how significant the move is. Fundamental analysis is based on company performance and determines which stock to buy. Why does volume matter? Volume matters a lot in any stock activity. It represents the interest in the trading activity of the mentioned shares. Heavy volume indicates heavy interest and light volume indicates lighter interest. A rise in volume tends to indicate to focus and take significant price moves in many cases. How can volume measurement in stock be beneficial? Trend confirmation. A rising market should see rising volume as buyers require increasing numbers in order to keep pushing prices higher for profit. If the price is increasing and the volume is decreasing, that might be a sign of lack of interest and a warning of a potential reversal. To make it simple to understand, the simple fact is that a price drop on little volume is not a strong signal. Exhaustion moves in volume. We can see some exhaustion moves in a rising or falling market. These moves are pretty sharp combined with a sharp increase in volume, which indicates the potential end of a particular trend. Those participants who waited and are afraid of losing more of the move pile in at market tops, exhausting the number of buyers. Falling prices force out large numbers of traders eventually at the bottom of the market, which then results in an increase in volume. We will see a decrease in volume after the spike in these situations, but how volume continues to play out over the next days, weeks, or months can be analyzed using the other volume meter guidelines. Bullish signs. Volume can also be useful in identifying bullish signs. Let's imagine volume increases on a price decline and price moves higher, followed by a move back lower. If the price on the move back lower doesn't fall below the previous low and volume is reduced on the second decline, then this is usually interpreted as a bullish sign. Volume and price reversals. After a long price move, whether higher or lower, if the price begins to range with little price movement and heavy volume, this might indicate that a reversal is underway and prices will change direction. Volume and breakouts versus false breakouts. On the initial breakout from a range, a rise in volume indicates strength in the move. Little change in volume indicates a lack of interest, and there's a higher probability for a false breakout. Volume history. Volume should consider relative to recent history. If we compare today to the volume 50 years ago, there is a possibility of irrelevant data. Recent datasets are more relevant. 3 volume indicators. Indicators are not required generally, but they can aid in the trading decision process. There are many volume indicators to choose from, and the following 2 provides of sampling of how several of them can be used. On balance volume or OBV. OBV is a simple and effective indicator. Volume is added to increase when the market finishes higher, or volume is subtracted or decreased when the market finishes lower. This provides a running total and shows which stocks are being gathered. It can also show divergences as when a price rises, but volume is increasing at a slower rate or maybe beginning to fall. Check in money flow. It focuses on the expansion of volume when prices finish in the upper or lower portion of their daily range, and then provides a value for the strength as rising prices should go along with rising volume. The values will be high when closing prices are in the upper portion of the day's range and volume is expanding. What is relative volume? The relative volume is the comparison between the current volume and the normal volume, displayed as a multiple. What is the normal volume? The normal volume is the average volume for the given period of time for a past specified number of days for that particular stock exchange. Why does it matter? For example, when the relative volume is 2.5, it indicates that the shares are trading 2.5 times the normal volume, which is 5 for suppose. This reveals an increase in trading activity that may lead to a significant price move. Relative volume is available on most of the trading chart platforms. A surge in volume indicates money flow into or out of a stock, which indicates action. Where to find volume on a chart? trading charting platforms can visually display volume throughout the trading day at the bottom of the price chart. Volume is displayed as a vertical bar typically, which represents the total volume for the specific incremental charting time period. Volume bars are usually colored green or red, where green represents net buying volume, while red represents net selling volume. Some traders might prefer to measure the volume with a moving average in order to spot when the volume is relatively heavy or thin. Conclusion: volume matters a lot as any stock activity. It represents the interest in the trading activity of the mentioned shares. Heavy volume indicates heavy interest and light volume indicates lighter interest. Indicators are not required generally, but they can aid in the trading decision process. That's it for today. Thanks for watching. I hope you learned something new about volume in stocks. Please like and subscribe for more videos.